Hey, good morning, everyone. It's Louisa, and I hope everyone is doing great today. Today, we are going to take a look at this morning's price action. We had a market maker buy model. We know that yesterday we had a sell model, if you follow my channel. So this morning, I'm going to review the key levels, and nothing changed on my chart from yesterday. I'm going to be discussing the characteristics of a smart money reversal, how to recognize it, when to get in, when to exit, and where to put your stop loss. Today, I wasn't going to trade, but I saw this potential setup forming early this morning, and it looked so good that I decided to hang out. So I grabbed 236 points this morning with 5 contracts, and I want to get into all of it with you. So let's get started. I'm going to share my screen, and I hope I can get it big enough here for you guys. Boom, there you go. All right then, so as we discussed yesterday, we were looking at key levels, and I'm just on the 1 hour chart right now, and 1 second here, guys. Yeah, I'm on the 1 hour chart here, and I want to just review the same levels that I reviewed with you guys yesterday, okay? So up here in blue, we have our rectangle areas where IPTA reprices to. So we discussed this area up here with equal highs. We talked about this area here where we can see price constantly reprices to this area. We broke through this area yesterday, and we had this massive sell-off down to a key level, and overnight it dropped into this key level. What are the two key levels? Well, it was a previous week low, and it was November low. And then you can see below these levels, I have another blue box down here, and this is another level with equal lows. And so these are key levels that I keep on my chart because IPTA consistently reprices. So long as IPTA consistently reprices to these levels, I'm going to be keeping them on my chart. So with that in mind, let's dig a little deeper. Let's jump down to the 5-minute chart, and let's take a look and see what London and Asia did last night. As you guys know, London and Asia for me is it's kind of like the trailer to a movie at the theater, right? Like a trailer grabs you in and says, oh, you know, here's the preview of what's going to happen in New York AM session. And if it looks good, you know, it'll give you some tips, hints to plan for a potential trade. So if we look at Asia last night, so here is Asia. Asia did what I like to see, where Asia just ranged. So it was from this high to this low. It didn't break outside that. It didn't trend. It was just a really nice, simple range. And I would expect that, I would anticipate that after a day like yesterday, where we had quite a large movement by the market. What was interesting to me was London. So London opened up, and I was awake for London. I often, sorry, my dog, as soon as I turn the camera on, my dog gets weird. London last night was interesting. I get up for London at least 3 nights a week because it really is, for me, the eyeglass into New York AM session. So London dropped again, and then the last stage of London, the last 90 minutes of London, was basically an accumulation. So we had accumulation for Asia, a little bit of a drop, and then an accumulation for London. I apologize for my dog, I don't know. So at about 5:55, so 6 a.m. this morning, price began to drop down, and I'm watching my key level. I'm watching our November low, and then below that we have our weekly low, previous weekly low, and November low, and equal lows. So these are big levels, right? Price can do anything. Price could bounce around. It's Friday. Price could go sideways all day. We could see another big dump today, or we could see a smart money reversal. But I don't know what's going to happen, but I'm watching. I'm anticipating. I want to anticipate what IPTA may want to do. So let me just put some times on my chart here for you guys. At 9:30, so this is a 9:30 here. So let's put that on. Just before 9:30, so in the last 90, in this gray box here, it's a 90 minutes. All my gray boxes are 90 minutes because I trade time and then price. So in the AM session, price was dropping and it hit below November low twice. And if I just show you here, here is our previous low. And you can see that SMT, we had a divergence between ES and NQ, and that's exactly what I'm looking for. So NQ took November low, but ES did not. So at 9:30, price came down and it swept or purged liquidity one more time. Now, prior to 9:30 this morning, I took 2 trades because I was anticipating for price to go bullish this morning. And I entered twice and I took 2 small losses. I was anticipating, but I was too early. You know, I was thinking I was going to get in before 9:30. But so you'll see, I took 2 losses. And then finally, the third purge came. And so we swept this area, and the previous area that I just showed you. So it was a beautiful purge of liquidity. Then price started to move up. Now, what are these yellow areas on my chart? Well, yesterday we discussed how the market maker sell model, right? We were selling off yesterday, and the market maker sell model was creating these SIBIs, right? They're fair value gaps, but they're SIBIs. And so when you have them on your chart, once the market turns into a market maker buy model, all we're going to do is, as price starts to move up, so long as price respects these fair value gaps from yesterday's sell model, we know that price is going to continue up. So it's like a staircase, right? Price is coming down on a staircase. Have those levels on your chart from yesterday, and all you're going to do is follow those levels up when the market maker buy model starts. Okay, how do we know that a market maker buy model is about to start? Well, that is part of my strategy, which I have shared with you guys like so many times if you follow my channel. So what we're looking for is, number one, by the way, you guys should be able to discuss and describe your strategy in like literally 5 or 6 phrases, okay? If you can't describe your strategy in 5 or 6 phrases, you need to define it a little bit more in your mind and be a little more specific, because the more specific you can be about what your model is, the easier it will be to find it and define it and act on it. So number one, we're looking for higher time frame liquidity. That I call a point of interest. Then we are looking for a purge on liquidity. My dog is into something. Okay. So did we have that? Yes, we had a higher time frame purge on liquidity, okay, on the hourly chart, and we purged November low. So that is our point of interest. We had the purge, and then we need time. What time did that happen? That happened at 9:30. On the lower time frame, so now we have those check boxes on 1, 2, 3, 4. Now we're going to move down into a lower time frame, and what are we going to look for? Well, let's write down what we're going to look for, and then we're going to move into the smaller time frame so you can look at it with me. So first thing we're going to look for is the purge. Then we want to see displacement back into the range. Next, we want to see a change in the state of delivery. I want to see an inverted fair value gap with a fair value gap which equals a balanced price range. If we have those confluences or components, we generally also have a breaker block. And in this case, I would be looking for a bullish breaker block. So let's now, and then we need time. What is time am I looking for? Well, I'm looking for the macro, and macros, as you know, are XX45 to XX15. That's the first macro of the morning, which would be 9:45 to 10:15, and then there's a second macro from 10:45 to 11:15. Those are the only two macros that I would trade in the morning. Okay, so let's jump down now to the 2-minute time frame, and let's take a look and see if we can find these confluences that will tell us that a smart money reversal is coming into play. And then we'll talk about the 4-hour candle and how I use that. Okay, so we've got our purge, so that's a check. Do we have displacement back into the range? Well, we have beautiful displacement. See these nice tall green candles back into the range? That's displacement. That tells us that IPTA wants to move. It wants to move quickly, and it's got somewhere to go. It's probably going on vacation or something. So we've got displacement, check, check. Do we have an inverted fair value gap? Well, let's look for change in the state of delivery first. The change in the state of the delivery is a candle or a series of candles, down close candles, that then begin the movement or support the movement up. So this range of downward closed candles, this is the range. So at the top of that range is my change in the state of delivery. And I'll make this just a little bit bigger for you guys to see. Change in the state of delivery right here. Now this is on the 2-minute, but we know that price is fractal. There we go, change in the state of delivery. So I am waiting for displacement to come above change in the state of delivery. Change in the state of delivery often is accompanied or is part thereof a breaker block. So let's take a look at the breaker block here this morning. So we have a low, a high, whoops. Okay, we have a low, a high, a lower low. And then, of course, a higher high. So we've got our breaker block, a higher high, you can put it anywhere, right? So we have a low, high, lower low, higher high. So that gives us our breaker block. So we have a change in the state of delivery, we've got displacement, we have, now let's look for our inverted fair value gap. The inverted fair value gap is on the range of candles that lead down into the purge of liquidity before the displacement out. So it's on this leg that I'm looking for the inverted fair value gap. So coming down, it would be a SIBI, but coming up, it turns into an inverted fair value gap, and price should, excuse me, price should respect this inverted fair value gap. So here's our inverted fair value gap. And then what is the next thing that we're looking for? We're looking for a fair value gap. Well, when price is moving quickly, there should be a number of fair value gaps that form. So here's the first one. Here's the next one. I mean, you could continually put them on your chart going up, right? And in this area, I like to see them either really close together or overlapping. Now, if we were to go down into the 1 minute, you're probably going to see these two overlap, but I like to trade on the 2 minute because the 1 minute sometimes moves so quickly that it can psych me out of a move, or it can, prevent me from getting into a move. But I find the 2 minute is kind of like, it just slows things down a little bit, but because price is fractal, it's showing you everything that you need. So that's just how I trade for the time being. So anyway, okay, so we've got our inverted fair value gap. We have our fair value gap, which gives us a balanced price range. We have our purge on liquidity. We have our breaker block, our bullish breaker block, and now time. Let's look for time. The macro begins at 9:45, so that is 9:44 is right here. So let's just put that on our chart. Now, when a manipulation happens prior to 9:30, which it happened just at 9:30 this morning, I had made a couple of false starts in here thinking that manipulation had occurred prior to 9:30. But again, you'll see those on my chart in a couple minutes when I show you the actual trade that I took. Okay, so now we decide that, okay, we have all the confluences that we need. We've got time on our side. Let's get into this trade. Well, where are we going to get into the trade? Now, if you trade this model and you become really confident with it, you could enter the trade right as price moves above the change in the state of delivery. You could also enter the trade if you want to wait and enter at an area that's a little safer. You could enter here. You could wait for the next fair value gap. You could enter here. You could also wait for price to come back into this fair value gap again here. Now, some of you may say, well, Louisa, how do I know to enter in this fair value gap rather than this fair value gap? Well, it's a valid question, and really we don't know. However, when IPTA is in a state that it wants to get somewhere quickly, you're going to see long, strong candles. And generally speaking, when you see long, strong candles, there's a good chance that price is not going to come all the way back down to the first fair value gap or the inverted fair value gap. So that's a good thing because we don't want it to, right? We want it to just tap that fair value gap and keep moving up. So I think I entered on this one actually. But again, we'll check that in just a couple minutes. And in the meantime, I'm looking to the left of the chart and I am looking at all of these inverted fair value gaps that price is respecting. Okay, so again, this is on the sell side of the curve, and as long as price is respecting these fair value gaps, price just continues to move up. So these are, things that you should be looking at from the left side of your curve. Let's talk about stop loss. So stop loss, I would put, let's say you were getting in on this fair value gap, I would put my stop loss probably at the bottom of this down close candle here. That's if you're getting in here. You could be a little more conservative and maybe place it under this candle. If you get in right at the change in the state of delivery, if you get in right here, I will put my stop loss below the low. This low should not be broken. You could also put it maybe just under this inverted fair value gap. Now, price should not come back down here. If it does, then your trading idea would be invalidated. So that's where I would put my stop. And I think I entered here, so I think my stop was at the change in the state of delivery. Like, there's no way that price should come back to the change in the state of delivery. So I think that's where I put my stop loss. Okay, so as long as we're in the macro, I am going to continue to stay in the trade. Now, this area here, this is what I call price distortion. This is where price, it moves up for a while and then it takes a little break. It takes a rest. It's like you're on the cardio machine for too long and you need a little break, or I do anyway. So this little chatterbox area here was just price distortion before second level distribution begins. And this area was at 1016, 1018. So that's when the macro is starting to end, right? Because our macro is 9:45 to 10:15. But I wanted to stay in the trade and work through this price distortion and work on my patience as a trader, because this is my weakness. And so I wanted to wait until the next macro began because I had a pretty good feeling of where price was going to go, which was higher than London, but we'll take a look at that in a few seconds. So anyway, price distortion, and then let's take a look at where the next macro started, and that would be 1045. So that's right here. And as you can see, price started to move up very nicely. It took a little bit of a pullback and then continued up and continues to continue up. So that's what price action looked like. I want to just talk about the 4-hour candles for a minute because I love the 4-hour candles. So you can see that this candle opened at 6 a.m. and this candle, the low was right here. That was the lowest point, and then price moved up. But it's the 10 o'clock candle that I watch specifically, and that's why it's nice to wait for the 10 a.m. before taking a trade. Although the 9:45 macro, if price is going somewhere, is a good time to enter as well. But if you want to be really conservative, wait for 10 a.m. and wait for this 10 a.m. candle to show you what it wants to do. So the 10 a.m. candle here looks green, but we know when the candle opens, so it would open here. It came down to here, it swept this area down here one more time, and then started to move up. But this green candle starts off black, and we want to buy to go long in this area of the wick, and alternatively we want to sell short at the top of the wick. That's ideally where you want to be entering in on a trade. And then the meat of the candle is distribution, right? So this is our manipulation right here this morning. So we took out the low right below November low. We had a purge of liquidity. We had all the signatures of a smart money reversal, and then I've walked you through the management of this trade. So that's what it's looking like. Now I just want to take you up here one more time on the 1 hour. And to me, when I saw this area being swept, you know, I'm thinking to myself, this would make this hourly rectangle up here, which we've had on our chart now for, I guess, 2 weeks. This is definitely an area that price may reach for. And, you know, we have these equal highs up here, which we have not touched. So equal highs. So you guys know that I've had this on my chart for a while. Now, I'm not sure that it's Friday. I'm not sure we're going to get up here today, but these continue to remain on my chart. And when you guys review your charts this weekend, you may want to, you know, take a look at these areas and put them on your chart too, or not. So, okay, so let's go back to the 2 minute and I'll show you where I entered the trade, and let's just take this off. But there are lots of places to get in the trade. You don't need to be the first trader in the trade. That's something I'm guilty of. I like to be first in a trade, but you know, it's riskier. But anyway, and then you'll see where I took my false starts this morning, you know, which is fine. So make this as big as I can. So here you can see, tried to go, long here, and then I didn't take a loss there, and then here again, I tried to get in thinking that I thought this was manipulation, but once 9:30 opened up, we had one more purge of liquidity. So for me, I just need to work on a little bit more patience and perhaps wait for that second fair value gap before entering. That's my kind of lesson from today, which I'll be journaling. Anyway, I finally got into this thing right here. So it had passed the first fair value gap, and then it had just passed this second inverted fair value gap. So that to me confirmed that indeed price was had moved into a buy program and that I was okay to get into it. So I entered here at 24,840. My stop loss was at the change of the state of delivery because price should not come back here. And then price was respecting our inverted fair value gaps on the sell side of the curve from yesterday. So beautiful to see. It's magic to see it actually. And that is the algorithm of the market, like in its absolute most perfection type form. I just love to see this. It's so predictable. and that made me stay in the trade. So price came up, and I took a few partials here. You'll never go broke taking partials. I think it was ICT who said that. And then I took my last position out here, and that was the high of London. No, Asia, just below the high of Asia. And that's where I exited my trade. I was content, content there, but that was 236 points. I don't know what the RR was on that. I guess I'll figure that out for my journal notes. But again, I just want to go back to second here. I just want to go back to the 1 hour and just kind of take a look at the key levels. So here we are right now at 25,246. And this key, I don't know that we'll make it to this key level, but it's be pretty interesting to watch it for the remainder of a day, especially on a Friday with no news. Like, that's just crazy, right? It's probably seasonality. But anyway, I'm quite interested in these equal highs here and then here. And, as we go into the end of November and December, we'll see if the bulls just continue this crazy run, and then these key levels, will be areas that I'll be looking for price to hit. So that's everything, guys. It's just the same old same. I feel like I'm being a little bit boring as I make these videos because I'm not giving anything interesting or exciting. My model is this is my model. This is what I trade every day. I know it like the back of my hand, and I'm just perfecting it. The second model that I use is a continuation model. So if I miss the initial move, where do I get in? And it's just really, really simple. I just wait for a pullback to a fair value gap and then enter there. But having this hierarchy, this larger time frame mapped out on your chart, gives you anticipation of where price wants to go. And then having your 4-hour candle embedded in the chart is really of great benefit, so you're not moving back and forth. And the other thing that I like to use is ICT's new week opening gap and new day opening gap, and that is the one that I use is by Fadi, which I know ICT spoke so highly of. That's why I use it. So instead of putting the new week opening gaps and new day opening gaps on your chart, you can just use the indicator. Again, it's by Fadi, F-A-D-I, and I'll link that in the description below. And so these are areas of liquidity as well. So you can see that this area up here where the equal highs are, this is a big new day opening gap, new week opening gap, and it even gives you the dates here, which is really super, super helpful. So again, these are areas of liquidity. So I like to have those on my, just kind of refer back to them on my 1 hour chart. So that's all I've got for you today, guys. I was pretty happy. Again, I wasn't going to trade today, but when I saw that we had hit November low, that is a key level, and that is external range liquidity. It's what I really like to trade because it gives the best run, or the potential anyway for the best runs. And I was pretty happy to take 236 points out of the market today. So that's all I've got for you. You guys have an awesome weekend. Please like, share, and subscribe. It really does help our community grow. And have a great weekend, and I'll see you guys next week. Okay, talk to you later. Bye for now.